Hey everyone, so we are the second day of the mining investment event, and we're lucky, we're privileged. We're here with Mr. Keith Boyle from Newfound Gold, a company that's made waves over the last few years. Mr. Boyle, tell us a little bit about your company. Tell us just what's going on, because it's an exciting event. We're seeing a lot of companies, but you guys have one of the premium companies.
Well, so it's an exciting company, you're right. Back in 2019, they drilled a spectacular hole, lots of visible gold in the quartz veins there, and it really created a lot of excitement in the market. And they, continued to drill over the last 5 years, and over that 5 years, drilled a deposit out that we released our initial mineral resource in March, and that resource is 1.4 million ounces in the indicated category and 600,000 ounces in the inferred category. So that's a really good start to defining the amount of gold that was drilled out during that time. 70% of those ounces are, like I said, in that indicated category, which really demonstrates that, yes, there were a lot of meters drilled, but a lot of them were actually quite close spaced because they wanted to make sure and follow those high-grade chutes that were identified. And you've got, what I would say, an orogenic gold deposit that when you think of some of the others in the globe, this is one of those that has that high-grade signature that is associated with it. So that's what we found. We've got a property package that's 110 kilometers long.
So there's more.
For those that know, that scale, that's like Val d'Or to Rouen. Okay, that if you were to take a 20-kilometer swath and just put that Val d'Or to Rouen, the number of deposits and mines. Ask Agnico Eagle, that's probably half of their production.
That's true.
Or close. So when you look at that, you say, wow, that's a big property pack. Yes, and we've got the two main fault systems that are the plumbing system that brought that gold mineralization to the surface is what we found. So we've explored basically 4.5 kilometers of 110 on one of the two main fault systems.
So there's a lot of room.
There's lots of room. We've got great targets. We've announced just in the last few months some really spectacular results from the exploration that we did after the resource was calculated, and so we're excited by one. We've got this deposit that we're looking to advance to the development phase, but we've also got a property package that's full of exploration targets.
One of the key things you mentioned is high grade. Now we see a lot of, so first of all, we're in Quebec. Quebec knows gold. You mentioned some of the most known regions, Val d'Or, Rouen. But one of the key factors you mentioned is high grade. And high grade is getting rarer and rarer to find. And why is it so important when you're looking at a company like yours, the high grade factor?
So we have, I've spent, of 40 years of a career, I've spent more than half in vein deposits, in the Abitibi, in Timmins Camp, in Western Australia. Like I've done lots of gold. High grade, like grade is king is the expression.
Yes.
And so when you look at what we have, when you look at the resource that we have, and if you were to vary the cutoff grade, our resource is at 0.3 cutoff in the open pit and 1.65 grams per ton for underground resources. If you were to just raise the cutoff to 2 grams in the open pit, you're looking at about 3/4 of the ounces in 25% of the tons. So now you've got to reflect on, well, that's, as an operator, that really does lend itself to, it doesn't matter what the economic conditions are around you, you're going to have
less rocks.
Typically a good operation because you can flex the operation the way you want. I've operated those mines before, and the gold price drops out. Okay, well, you raise the cutoff and you're able to keep profitable. Or, oh, you're a little bit short on your production this quarter, you go to the jewelry box. You go to that really high-grade
jewelry
vein.
box.
Oh, now you add it to the mill. So it really lends itself to that flexibility that, and it's high margin.
Well, less rocks to carry,
Well,
more gold.
Well, if you think on average, okay, just on average, the average grade of an open pit mine in the world is 1 gram. The profit on that is maybe 0.2. Well, if you have a 2 gram deposit, the profit on it isn't 0.4,
No.
it's 1.2.
That's true.
So the profit becomes 5 times big, 6 times bigger.
Of course.
Because of that extra gram. So that's how you have to look at when the grade gets better. It's not from 1.8
That's it.
to 1, it's from 0.8 to the other end. So those are the kind of opportunities when you have, in particular, high-grade veins, where you have such great intersections that, you know what, there's the jewelry boxes really make the difference.
Well, and what I'm getting a sense of is, and I think the viewers are getting a sense of, is the experience. Because you know all of this. You've done this before, you've been in this sector for so long, you understand the mathematics, the metrics to it, and why does that matter so much? Because some investors, they see gold and they just go out and they invest in whichever company pops out first. But in this case, you want to invest in experience, but at the same time, you want to invest somewhere where the mathematics makes sense.
Yep.
And you've just touched on that.
Well, you know, when I had I've only been in this particular role for 4 months. Like I said, I've been in the business 40 years.
That's it.
This will be my 9th development project. And so I've seen the movie 8 times, just a different theater now. And so the steps are all the same. What's critical for us will be to make sure that the high-grade veins are well estimated. And so we're taking the steps to de-risk that.
That's true.
On surface, the team at site exposed the veins, the high-grade veins on surface, exposed them. And when I say exposed, they created a surface area, exposed those veins for 4 football fields big. So the surface area that they exposed, not only once, but twice, 2 separate areas that big. So they were able to really map the veins properly and interpret the veins properly. I've been in a situation where, okay, we do an interpretation, but we have to go underground. You go underground, you get there, oh, you're surprised because the connecting of the dots wasn't the same. So now, oh, hang on, we can expose it. We can do all the mapping and interpretation, and then we put the resource together. We have a much higher level of confidence that the dots were connected properly.
Jeez. And you mentioned something important, de-risking. Because a lot of these investments, sometimes, I'm not talking about your companies, but other companies, you're jumping on something that's speculative, but at such an early stage that the risk is there. And you guys are minimizing the risk by doing all this work.
That's right. So we're, there's, like I said, the movie's the same. Take the steps, don't take shortcuts. Go through the steps and start, in our case, small, expose it, do the right mapping. Exposing it was cheap relative to doing a ramp and going down and, you know, millions of dollars, a couple $100,000, poof, it was, you know, done. So when you do that, you start small, less capital to raise, less dilution in the market, better for shareholders, and you're de-risking the project as you go. And then that kind of return to shareholders will show up in a share price, an increased share price.
Well, that's true. And another thing you just touched on is, well, and I'm sure you know, the sector as a whole has been sort of in a lull for the last 2 or 3 years, and some would say even longer than that. But we've seen gold make higher highs constantly. And even today, yesterday gold was down almost $80. Today it caught up again. I mean, we're seeing the market explode. Anything in Canada, but I would say even in your case, being this close and in that development stage, pretty much at a discount. The company is undervalued.
Well, all of us developers are undervalued. If you look historically, we're probably undervalued in terms of where we're at by a third. So we're a value of a third of where we probably should be. If you look at the historical numbers, and that's developers across the board, the money, the capital coming into the sector has been diluted because you've got things like Bitcoin and the AI. And so that capital, that risk capital is looking for other places for that. So we're not seeing the same focus. However, having said that, where you can demonstrate that you've got a good leverage, torque, when you put the investment in, and there's a clear path to that leverage, you know what? I think we'll be able to attract the right investors, and it was shown actually. Last week we announced the bought deal. It was well oversubscribed. People really saw that we have a good plan and a good path.
And that's a clear indicative. When you see these bought deals getting oversubscribed, that's usually a good sign that management is good, path is clear. And now, for investors that want to follow your company or even jump on board on the story, you're trading on the TSX, correct?
We're on the TSXV.
Yes.
And we're on the New York Stock Exchange.
Perfect. Ticker for both?
It's NFG for the TSXV and NFGC in New York.
Perfect. Well, thank you very much for coming in today. And again, best of luck, but as the market is performing and you guys have a plan, I'm sure luck is the least of your worry.
Hope is not a plan.
Exactly. Hope is not a plan.
All right. Merci beaucoup.
Hey, merci à toi.
All right. Thanks.
Thank you for watching the video. Don't forget to like and subscribe, turn on the notification bell, and comment down below what you thought of the video. Don't forget to watch our latest video right over there. Click it, come on, I know you want to. And we'll see you in the next one. Bye guys!